Good evening, I'm Giuseppe Basile, I'm the NDZUSD. You can find it at the website www.fibstalker.com. I also post regularly on Twitter using the @fibstalker nickname. Good evening, today is Monday, March the 3rd, 2014, and it's midnight in Toronto. And in this video, I'm going to review for you four major markets: the pound versus the US dollar, the Australian dollar versus US dollar, the US dollar versus the Canadian dollar, and the New Zealand dollar versus US dollar. So let's start from the daily chart of the pound versus the US dollar. As you know, and those who follow me know that I will remove this to not create confusion, that this market has been trading highs to highs in extension, and we saw participation at this level 158.40.50 area, and then which broke price into 164.54 to 167.70, the second target. And we know that after we get an extension, then we are looking for, and Program Trading is looking for trading the next level in the sequence, and this would actually be at 165.43. In the last few days, yesterday actually, in the daily review, I showed, and moving into the 2400 minutes chart, I showed you potential trade long, continuation long, but at the same time I also showed you a failure of the sequence of 15 minutes. Still, there was an indecision because there was a failure of 15 minutes time frame, and then price funding support at the all the way halfway back, which actually identified a new target 168.80. However, the short side actually was the actual trade that worked, and not surprisingly though, because as we saw on the daily chart, this market is looking for really for an opportunity to correct into that next long, and we had actually a measure move that was not respected before, but then actually started working. Now, this is not something we could trade. You either took the shorts, and you can review yesterday's videos to show you the entry, but basically the entry was from was at the breakdown of this 167.52 level. If you review the video, you'll understand why this was the level to watch, and this would have given quite a very good trade if it was not if price would have actually failed this level of support before. We could trade there with confidence, but unfortunately price found support at 166.92, and in fact this brought price into high. So the trade on the 15 minutes would have generated a free risk trade with a stop still above 167.68, so 167.69, and this would have then provided a good trade, and you would still be into this trade. So if you trade at these levels, there's no reasons why you should not continue holding shorts here, and shorts are going to, as we said, are going to bring price into this 165.43, and in that case, so what is possible is that if we get a retrace into the all the way halfway back here from this trade before we trade support, then this could be a good opportunity to get short this market. Notice though that we want to see a retracement before we get into the previous level of support that was actually identified very clearly here, because we got participation at 165.80. So if we get to this 167.03 and we can time the 15 minutes chart before we get into 165, then we can trade that with confidence and with the possibility of getting 5 to 6 reward to risk trade here if timed on the 15 minutes into 165.81. Moving to the Australian dollar versus the US dollar and starting from the daily chart. This daily chart is showing weakness as we can see here, and we were able to trade a very successful trade here, and actually that worked and produced a free risk trade. Congratulations if you took that trade. And the market never got into this 088.69 target. What happened on the other side is that the market just traced highs to lows, and you should be still in this trade with half of your position, because this trade generated a free trade. And as we can see here, just a few minutes, couple of hours ago, the market came to test this 089.69 and it's now continuing lower. And apparently, though, you could still be apparently you should then consider you have now two targets to consider. One would be the old target 088.68 and the other one would be the new target from this retracement. So what I'll do, I will just consider the old target. So if price gets into 088.68, you will have completed this trade. Of course, there is a possibility for this trade to continue lower. We also have to consider the other side of the trade, and that's one of the reasons this market has been finding support. And actually we are not still there, but if we consider that level 88.70, that's very close to that target 88.68, very close. So it's possible that that's the level where you want to remove shorts if you have shorts, and you have to consider that at that level we'll have longs here. So we will need to verify whether we are going to get a break. So it's very important that once we get into 88.70, if we get there, we will need to verify whether the next level of resistance 89.28 will hold, or whether this will the presence of this move of program trading long here will actually break this 89.42-43. So that's very important to observe. So far, just keep trading the shorts as the trade as it was provided here, and right into that level of support. Moving to the US dollar versus the Canadian dollar, I want to show you a review of what happened today on the 240 minutes chart. And as you know, yesterday in the weekly review, I've identified a sequence of measured movement on the 240 minutes chart here. Highs to lows, which gave us the 111.36 to trade short, brought price into 111.05 and then 110.88 here. So this was an extension, and so we treated it as an extension, and we could actually see the next measure move right into this time frame. And this was lows to lows, and actually price responded to this 110.96 and brought price into the next first target 110.69 and then 110.05, which was the second target. Now I tried to see whether this sequence of measure move would continue, but as you can see here, it failed. So when it failed, then market came to trade again the all the way halfway back here, and so price came from highs to lows. And you will remember that I gave you this level yesterday. So if we look at the 15 minutes here, we are going to see that it's very this move higher has been very difficult to read. There's been just elevator up here, just presence of um, buy order bringing price into that next level of resistance. So the structure is not very clear, but still we can identify some sort of structure. Very not easy, and but that would be my best read for what program trading is has been doing on this market. So first target, second target hit with 111.09, so with an actually 3 pips front run here. So going highs to highs, we would have identified here the level of failure, and it was this sorry, and it was this level here, the actual 110.99. This would have been the level to short. Now, as you can see here, with a stop above highs, as you can see here, this level of resistance 110.98 is still acting as a resistance. If you traded the level I provided before, you would have a free risk trade here. So at the moment, you should have half of the position is stop above highs. That would be the current position. And finally, I want to mention the New Zealand dollar versus the US dollar. And again, before we get into the 15 minutes here, the 200-day moving, the 240 minutes here. And I want to show again what happened in the last few days. In this time frame, we had highs to highs, support at 82.90 area here. It was not clean, but the 82.81 was not breached. It's not considered breached here. And when we trace from highs to highs, we had a violation. And actually we had a violation on Sunday night with that gap down. Now, as we had that violation, the next level of support I would be looking at would be the lows to highs, and this was never tested so far. So what this market is responding to is two levels. The first level, which traded before, was the short. So this again was a good trade if you time the 15 minutes here, and you would have received a free risk trade here. The point is right now is that this market is trading between lows, between shorts and longs, and the longs came here not very cleanly the first time at this 183.52. Now this support is being respected, but if you you would have traded the short before, because the shorts traded before. So either this market now, although this market is now moving between shorts and longs here, you would be in a short, and timing on the 15 minutes would have been actually very straightforward and simple here. That's the application of the Fib stalking technique. Lows to highs, first target, second target, again highs to highs, as this is an extension, participation, and front run to the second target here. So highs to highs would have offered you the level to sell, which is a breakdown of this 083.79, so sell 083.78 with a stop above highs, and this would have given you a free risk trade, and actually even a temporary 3 to 4 reward to risk trade here if you wanted to take